What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we did get that very impulsive short squeeze and we are now potentially setting up what could be bear trap round number 6. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in the SPY we went absolutely nowhere, and yes, I do mean absolutely nowhere, closing at a 0% gain for the day. But we did have a very exciting open because we did gap up over that very critical resistance at SPY 421 and we did start to see that very impulsive short squeeze. So without a doubt, bears continue to get squeezed out of the market during this bull trend. And do keep in mind there is the possibility we are setting up yet again another bear trap. So if you are still shorting this bull rally, you need to be very cautious because this is the perfect opportunity to set up another bear trap. Now keep in mind I like to keep these videos concise, but in the Stocks channel Discord I give a lot more evidence on why I say the things that I say. And if you just think I'm blindly guessing on what I think is going to happen, you couldn't be more far from the truth. I give a lot of evidence on exactly why I say the things I say in the Discord server. So if you want a lot more detail or a lot more information or intraday updates, you need to get in the Stocks channel Discord server. We have a lot of day traders that are crushing this market, and today we did sell at the high because that was a short squeeze and we do not want to be part of the short squeeze. So we took our profits and we waited for the slow bleed, and now we are getting back to some important buying levels. And as you can tell, we are going down on decreasing volume. So yes, we didn't go anywhere in SPY, but we did drop today from the highest point of the price action, and it was all on decreasing volume from yesterday. So we know without a doubt, if we continue to see low volume selling as we come into support during this bull trend, it is more than likely going to be another bear trap. So do not continue to fall for the same thing. And yes, I am counting the bear traps. That's how I know it is round number 6. And we have successfully called the last 5 out of 5 bear traps. So if you don't know my track record, it is pretty damn good at this point. Now, if we start to see higher volume selling and we slice through this critical support level, which is right around SPY 416, that is obviously not a bear trap, and that is a great opportunity to start exiting your long positions and possibly even shorting the market. So do not for 1 second let the market take away your gains. You need to manage your risk. And right now 416 on SPY is going to be a very critical risk level, because if we break below that, we could be entering a deeper pullback that could bring SPY a lot lower. So instantly get more risk off and start locking profits the higher we go. And if you didn't lock any profits at SPY 421 or above that level, I would caution you against getting overly greedy, because that is a very strong resistance level. Keep in mind I have the bear sitting at that level for very good reason, because if we start closing above SPY 421, we are likely exiting the bear market. But as you can tell, we failed to close above that level today. Does that mean we can't close above that level tomorrow or next week? Absolutely not. But we do want to be very cautious. The more times SPY fails to close above 421, the more likely we have smart money bears sitting at that level, selling their long positions and getting ready for the next leg lower. So SPY 421 is extremely critical, and I have 2 members videos in the Stocks channel Discord going into a lot more detail about very critical resistance levels and exactly how to navigate coming out of the bear market. So watch that level very closely and follow price action very closely at these very critical levels of SPY 421 and SPY 416. And if we break below the support, we're going to get a lot more risk off, because we will likely fill the gap at 413 and possibly even come all the way back down to 408 or lower. So remember, as traders and investors, we need to manage risk, and right now shorting a bull trend is not a very good risk reward setup. So if you continue to think that this is a rally that you need to continue to short until you eventually catch the top, you are going to have no money left, and you need to stop doing that. This is a bull trend with full bull price action and full bull trend. You are not going to have an easy time trying to short this market. So continue to buy at support and manage your risk around critical support levels until we lose critical support or lose the bull trend. Jumping over to the NASDAQ 100 triple Qs, we were down 0.57% today. And again, we did sell off on decreasing volume, because intraday we did hit that price target at 330 and we did see a slow bleed back down to support all day long. And remember, the bear is in this territory between triple Qs levels of 324 all the way up to about 334. However, that does not mean that the bear has to win the battle, so do not automatically assume just because the bear is here that the bulls cannot be victorious. Now keep in mind the bulls now have a successful 2 days in a row closing back over the resistance trendline, which I do believe defines the bear market in the triple Qs, and we still have full bull price action above all the moving averages and a full bull trend. So this is still a very strong bull trend, which means you should not be blindly shorting this bull trend hoping that you catch the top, because what if we continue to go higher all the way into the 340s and you continue to short the whole way up? Just stop trying to short a bull trend. It's very difficult to do. And if you are shorting, make sure you're not accumulating short positions in a bull trend, because that's how you become a bag holder. And it's a very quick way to get your name in the book of bears in chapter 11. So do not blindly accumulate short positions in a bull trend until we lose the critical support and break the bull trend. And critical support in the triple Qs is down here right around 319. And the support trend line right around 317. If we break that support, it's a completely different story and the bulls will be getting a lot more weaker. But right now we still have bullish price action above the breakout above triple Q's levels of 324, and we still have a valid price target to the upside at 334. In the Dow Jones DIA ETF, we were up 0.15%, and the Dow Jones did hit that very critical resistance zone right around 337, and we did see selling from that level. But as you can tell, the Dow Jones is still in short squeeze territory, well above that resistance at 333, and still has the full bull trend. So use the Dow Jones levels of risk at 333 and the gap fill at 329 and stay on the bull as long as we're above support, with the next upside price targets at 337 and then 341. In the Russell 2000 IWM ETF, we were up 0.37%, and the Russell 2000 was just getting way too far, way too fast, but did get very close to that price target at $200 and did start to see some profit taking from that resistance. Now keep in mind the Russell 2000 is getting very overextended, and it did see slightly increasing volume today. However, it did go up today because it did increase by 0.37%. So while this is a red candle, keep in mind that we did go higher. So overall, we still are making progress for the bulls in this very strong bull trend, with the critical support down here right around 193 and the gap fill right around 192. And you should be staying bullish as long as we're above 191. The next upside price target above 200 is all the way up there at 205. On the ARKK ETF, we were down 3.2% as ARKK hit that resistance level at 52 yet again and continues to find sellers at that level. But overall, we just had price action coming back down to the 5 EMA, and we still have the full bull trend. So you can still stay long in the ARKK ETF as long as we're above 49 or the risk level at 47. And you will need to exit below 47 because that is going to be extremely bearish. Above 52, we can still hit the next price target at 55.5, and you can see the upper Bollinger Bands are going to continue to expand, allowing the ARKK ETF to continue to climb higher. On the VIX, we were up 2.33% today as we see the VIX barely bouncing off of that support zone around $20, but we did not get the second day in a row closing below it, so the bears are still going to try to use the VIX at 20 to bounce off support and bring some more volatility back into this market. Overall, the VIX is still in a bear trend, and it will be bullish if the VIX closes below 20, so watch for that very closely. On Bitcoin, we are currently up just over 1%, and Bitcoin is trying to get another daily breakout above 24,000, and so far it does have the bullish breakout look, but it was going a little too far outside the upper Bollinger Band, so we did see some profit taking. From here, as long as we can stay above about 23,000, we have the higher low, and the breakout above 24,000 could happen as soon as today. So if we get the bull breakout, look for that bull run to take us all the way up to about 28,000. Continuing with our big tech hot stock names, we do have Amazon getting rejected from resistance yet again at 144, so you can see that 144 resistance level is very critical. We need a bull breakout above 144 to get to the next price target at 152, and if we break down below support right around 138, look for a retest of 134, and below 134 start getting a lot more cautious for some of the gap fill, but we will have a support trend line right around 128. So there is plenty of support with the full bull trend, and we still do have the full bull price action. So I'm not getting bearish in Amazon just because it can't break 144. We will get a lot more bearish if we start losing support. On Microsoft stock, we were down 0.74% today after we did start to break out above that price target at 290, but there was just way too much profit taking above that level. And overall, we did go down on decreasing volume, and we do have the full bull trend and the full bull price action. From here, it's still possible we fully close the gap at 283 before we find buyers to take us higher. But above 290, look for that next price target up there at 296. and it does look like with the full bull trend that Microsoft is ready to continue to trend higher. On Nvidia stock, we were down 0.86% and we still do have the full bull trend, but as you can tell from the price action, we simply closed the gap to the upside and instantly found resistance and then found sellers. The only thing I would be cautious about in Nvidia is the possibility that this is a lower high before the next lower low, which could take us to fill the gap at 157. So just be very cautious if we break down through critical support at 176. Below 176, I would instantly get more risk off for the possibility of the downside gap fill, and you can still stay bullish as long as we are above 176 with the next upside price targets at 191 and then 196. On Tesla stock, we were down 2.62% today, and Tesla continues to consolidate, which is starting to look like a consolidation wedge right above this support around 836 and just below resistance right around 900. So for that reason, I would stay risk off while we're below 900, and above 900, it'll look a lot more bullish for that next price target at 970. As you can tell, the 20 symbol moving average is starting to come in as support, which is going to give some dynamic support to push the price action higher just above Tesla levels of 840. So it is possible Tesla gets right back on the bull in the very near future and starts to push higher from here. If we lose that support right around 840 to 839, look for the next leg lower at 800. On Apple stock, we were down 0.44% as Apple hit the next resistance at 170 and started to find some sellers, and above 170 we should go up there and close the gap at 174. If we continue to get rejected from resistance, look for the next downside support at the gap fill at 166, which is also going to be our support trend line. Below the support trend line, we could come back down to 163 or fully close the gap at 157, which will obviously be a major breakdown in this bull trend. On the financials, we were up 1.18% as we continue to gap up and close outside the upper Bollinger Band, and by tomorrow we will have the full bull trend, and it's all happening on increasing volume, so this is incredibly bullish. On the industrials, we were up 0.53%, hitting that resistance and finding sellers, but overall we had the full bull price action and the full bull trend. The healthcare sector was down 0.65%, bouncing off of that resistance and coming back down to the 5 EMA, but we still do have the bull trend. The energy sector was up 3.44%, closing back above $77, and you can stay bullish as long as we're above 75 because we are developing the bull trend. So jumping back over to the S&P 500, do not be part of the majority that are still extremely bearish during a bull trend, and do not get bear trapped in bear trap round number 6. If you continue to see low volume selling down to the support trend line that defines this bull market, you should be buying and not trying to short. Stop going against the trend, wait for the trend to break down, and let's lose some critical support before we say the bull trend is ending. There is no reason to try to be a hero and try to call a top in a bull market, just like I told you not to be a hero and try to call a bottom while we were in the bear market. We could still be in the bear market, but we want to let price action do all of the talking, and right now the price action is telling us it's still possible that we're going higher, so we are going to stay on this bull as long as it lasts, and we are going to stay objective and we are going to stay bullish until we break support. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly, and we are crushing this market in the Discord server. If you're interested in joining the Discord server, you can find out how to join by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.